What up, what up? It's been a bit. How's it going? I don't even think I posted a video last week. So I am gonna include quite a bit in today's video, partly because of that. I think there's just a lot of good info I can add. I basically top ticked yesterday, was in and out in 15 minutes. And today took two clean entries and exits, and had like I was chilling all day. And I was active in the chat and I could see people's frustration going through the chop in this morning. And I just, I feel like I have a little bit of wisdom to impart in this because I've been through so many of these and I can kind of guide you through how to avoid things like that. So definitely, I would say, write as much as you can down, try and take notes. Because I think this will be very valuable to you in the future, and I think this will drastically help your trading. So let's dive into, first of all, it's let's zoom out a little bit. This is your August price action. Basically, since the start, you obviously just tricked a lot of people, right? We've seen this before. There'll be news. There'll be huge move to start off, and then everyone is wanting these big continuation trades to come out of it. But we have just exploded through a range that with very low volume, right? Not low volume, I would say a lot of aggressive volume, but there's a lot of pockets here that probably need to be sorted out and figure out, if buyers are willing to hold that price, if sellers are going to sell through it kind of thing. So yeah, I'm always very wary when that happens, and especially in August. So it's that was already kind of a sign, us looking for continuation above that. If you know anything from previous videos, I think I did mention in one of the last ones, but our TR pocket that we love so much on Fibonacci, it's one of two. Well, I'll have golden pocket always marked out, and then TR pocket. So TR pocket is right here. I'm marking that. I'm on ES. I'll show you some stuff on NQ as well, but for all intents and purposes, this will be applicable on ES. So 1.3414, 1.272, that marks your TR pocket right here. If you can't see it, it's like a blue and green line there. And yeah, that is a really solid area to reverse. It's fractal, so you can mark it out on much smaller ranges too. This is obviously on a larger range. We had our initial rejection, that looked very good. And then once more, creating if you zoomed out on a higher time frame, that would be kind of your breaker block, right? If you're looking on like a daily kind of thing, well, yeah, look at that. There you go. So you zoom in, reject, make a higher high, manipulation, cascade through. There's your breaker block right there. Tap, continue further. So yeah, there's so many things that are fractal in this kind of when you put them all together. Anyways, so yeah, and then I also had it marked out too, standard deviation as well. I was looking for this 4.5 to fail. That's 78.23. If you know my standard deviation strategy, it's just manipulation with an SMT. So there's, you can go back and look, but here's the manipulation right here on ES. I think it was either with YM or it did make a slightly lower low than this lunch low, I think, than NQ. But anyways, I think it may, oh no, it was YM because I think I have them both. Marked out, I believe. I can't remember. But anyways, so I had that marked out. So that was, and it was kind of holding true basically where it was moving strongly, and that kind of marked out where I'd look for some type of reversal. It lined up with this TR pocket. So it was pretty perfect. I wish I took some option puts there. That would have been super ideal. I could have swung some weeklies and actually made a decent amount of money, but I wasn't really thinking about that. It's August, I was golfing a lot. So that takes us into this standard deviation right here. So again, for people that don't know, you can look back in previous videos. Part of my strategy is standard deviation. I mark out 5-minute manipulations that create an SMT with the pair. So basically, if in this case I saw ES, it manipulated, took out these highs, which are just previous all-time highs. So yeah, sure, NQ also took out this high, but it's not above all-time highs. So that is your SMT there still. ES made a new all-time high, NQ did not. So I take this, I'll just zoom in here because that's on the 15-minute. So 5-minute swing low to high, that marks out a very large projection standard deviation that I'm looking for us to slowly fill out. And, it takes a little bit for this to play out. It's not going to be an immediate, just like cascade down kind of thing. When I do intraday projections, like you'll see with like NQ on the trade yesterday, I'll show you that one, how I top ticked it. It was, it's different kind of when it's intraday. Sometimes the reactions will be very fast and swift, and you'll be in and out. But I'm just trying to get a general marker on where this move might end up. And I do like, the 4.5 standard deviation lines up, below the midway point of this whole big range that we're in. So yeah, I have my eyes on that. But I won't be surprised, if we're going to have a quick reversal, higher, then it's going to be from this 7640s area. If we're going to really capitulate, then yeah, buyers really need to hold 7600 area, like anywhere in there kind of thing. So anyways, that's why I have that marked out. So that's just showing you that. Let's go yesterday's trade, and then I'll talk about today's trade, because there's more nuance in today's trade and more things, that I want to dive into, because there's a lot of chop, and I know a lot of people got chopped up today. So yesterday's trade is on NQ too. So, I know everyone for the most part loves to trade NQ. I trade it, when I get the levels for it, when it's obvious. But lately ES has been kind of guiding the show. So I've been mainly looking at ES. So part of that standard deviation strategy is when I mark it out, it has to be on a key open. So I'm going to get rid of this first on ES, because that'll come in later. So it has to be on a key open. So whatever the most recent key open is, if there's a manipulation that creates an SMT, I'm gonna mark it out as long as I see a reaction from it, right? So here is the zone that we're looking at right now for NQ, and that same zone is right here. Oops, let's zoom in a bit so it's easier to see. On ES, right here. Let's make sure I get it accurate, basically. So there's a new 4-hour open. So key opens are session opens, and then midnight and lunch hour, and then any 4-hour open. So those are all my key opens. No, there's not going to be moves that happen out of each key open. That's what makes this great. I like to really hunt for, where is it? Where's the move coming from? Where can I project a reversal from? And then at that point, I'm into the order flow and I'm hunting, right? So this is our key open area that we're comparing, right? So NQ here after the 4-hour open, and it's going to still say 5:30, so that's 7:30 Eastern time. So we're just shortly after the new 4-hour open. I'm just Mountain Standard Time, so I'm going to get rid of that. So just that marked out, that's just showing you the zone that we're looking at. So the most recent 5-minute swing high to low is actually these two right here. And we're just going to get off the fib, move to standard deviation. So it's this 5-minute high, right, to this 5-minute low. That's your most recent swing high to swing low. There is the, right, there we go. There is the lower low on NQ that ES does not make. It makes equal lows there. So there's your SMT. It is sequential, so we like that. Yeah, so that's you want the SMT to be sequential, like basically saying that you can see the SMT across time frames. It should not just be only an SMT on like, the 5-minute, kind of between two 5-minute candles. Like that's not good enough. It has to be from like the previous hour, I want to say at least. So anyway, so yeah, new lower low there. ES makes equal lows there. So there's SMT, so I mark it out. And that projects, this is pre-market. This happened pre-market. So I was just luckily, I was super tired. I fell asleep early and I woke up early. So I was up like an hour before pre-market and I saw this happening. So luck was on my side, I guess. And so I mark it out. Now I want these 2.5, 3 to like, look like they're giving some type of reaction so that at least I know this is valid. Where I'm really going to look for a reaction to see if I've marked this out correctly is the 4.5 standard deviation. If we just blast and we're still climbing hard into the 4 and the 4.5, oh yeah, I'm looking for like that to be some type of heavy reversal point. So yeah, that's what I was looking at right there. So I mentioned too in the Discord pre-market, this is why it's always good to pay attention. I said we're looking at either 747 or 827 for shorts. 827 was, so this is what I mean when I say it is fractal. So you could make the argument, I don't know if it's semantics, but you could say, well, this is actually the most recent swing high. This is an actual swing high. I don't know. But even if I mark it out from that high to that low, the 3.5 actually just like to the tick nails it. But I was also saying if it actually is that high that theoretically started the manipulation, then the 4.5 would be 827 right there. So, but yeah, anyways, it ended up just being how I originally had it marked out. And it just was like fractal in that case. And yeah, 4.5. So that was pre-market though. Someone was like, "Oh, is this a signal kind of thing?" Number one, yeah, no, I'm not giving signals. I just like to tell you what I'm looking at, what I'm doing, and then you can do whatever you want kind of thing. So yeah, I basically said, no, but like watch market open. If that level gets tagged, like see how it reacts at market open. So we're still pre-market at this point. Then we get into market open. So let's go to the order flow here for that. So we get to that level. We get to that level on NQ. I need to sync these on ES. So it was more apparent for sure on ES actually. When you looked at the tape, ES did more manipulation, but yeah, anyways. So on NQ, you see us powering into that level, and yeah, you don't see like any like mega sells coming in here. But you just see a lot of a volume taper, which is good. Basically meaning that buyers are not even able to like buy prices up there because someone is starting to absorb prices. They got limit orders getting filled out the wazoo here. So that's, you'll see a lot of natural tail off. Like buyers are trying to aggressively buy into this level. And just because of the nature of all the limit sell orders there, they're just like absorbing the buys. And yeah, then buyers like right at market open very aggressively like, you're done. And just like takes it down. You see one buyer trying to hold up this price at the 700s. And it was like they didn't stand a chance. They just got dunked on. And then after that, you see more confirmation basically from sellers just like launching price down. You see, another 100, almost 200 lots added in there on sells. So that's good. NQ is going to have just lower volume in general. It moves more, it's more volatile, but overall lower volume than ES. So the size of the orders, it's relative basically in a way, and not as many of these large orders because a lot of the big boys, they actually play on ES, not NQ as much. Anyways, yeah, so you see some bigger sells come in there, and yeah, it was a very simple target. If you're not even looking at order flow, you're just going like, okay, well, pre-market lows right there and London lows right there. London lows are actually there, I think, or no. Oh, actually, no, these technically were London lows because London started there. Yeah, so these were London lows, and then you just have, I guess that was overnight lows. Yeah, Asia lows. So, yeah, that right there kind of like gave you the two targets. And then after that, that's what a normal, like anyone that trades, just like your typical ICT levels, setups, taking session lows, highs, that's what they would do. They just London, Asia, boom, boom. When you see us like powering like that kind of into the open, into like a contested level, I guess, like especially if you're looking at order flow and you see London, Asia stacked like that below, like it's like almost free in some ways. It's very rare that doesn't actually get taken. Anyway, so yeah, so that gets taken. ES, even though it's more obvious on the tape on ES when you look at it. So we're powering into the open, right? You're seeing a lot of buys coming in. We're like very positive delta right here. But then you see deltas really start to get jagged there kind of thing. A lot of big sells that come in. There's some big buys that come in too to hold price up. But, you're kind of looking at who's getting disrespected, right? So I saw this right in pre-market, and I even sent in photos, 1.4K, 2K, 7755, 7748. I think I said 7746, but I was close enough. Yeah, so big sells tucked in there. And then what does price do after? It respects, for the most part, for a little bit into market open. Then we see sellers pile in the lows, maybe getting a little too excited. You see a holy, like this is your, like, when you see this, like, look at the size and the aggression. When you see the bold numbers there, that's just like showing that it's an imbalance, essentially. Think of it like a staircase, right? So it's not with the number across from it. It's not, I've had to describe this before. So let me zoom in so you can actually see. So it's not 37 to 33, it's 37 to 307. So that's actually an imbalance on the buy side. So on the ask, so that means like there's a strong buyer there that didn't want to even participate below here. It just wanted to buy above. And then after that, you can see right away, it just started respecting, right? So, but look at all these sells in here. So they're getting, like a staircase, right? It's like 901 lots to 104 kind of thing, 222 to 104. So there's some big imbalances to the downside, 1K right there. So heavy aggressive selling at the lows here. So at this point, you want price to continue lower. If they get disrespected like that, okay, well then you're about to get either dunked on or manipulated. In this case, it was manipulated. So right away, just lots of buys push price up. You see probably some capitulation of those sellers for sure. Into the highs, we make new highs on ES. We do not make new highs on NQ. And then this is a key level, right? We're getting into 77.55 area where that previous big seller was. So I don't really want to see it climb, more than like, I would say 10 points above on average from where I see like a big position player. Because at that point, I'm going to start to assume that they're, underwater, not in control. Maybe they're already out. I don't know. But yeah, so we kind of just edged that area. And that's just what makes this a manipulation. Then you see a lot of buying into the highs. Overall, CVD actually does not make a higher high though. It actually makes a lower high, even though price makes a higher high. So there's another divergence right there. Yeah, so you see a lot of buying into the highs right here. And then same thing as at that little reversal below, kind of. You see like trapped basically right after we get into these highs in this key area right here where a seller really needs to hold if they're going to continue to sell this lower. They do, and they hold and move price quickly away from that area kind of thing. So right away you see all these imbalances, these stacked imbalances, aggressive moves down. The buyers try once more, and then it just continues a lot lower. And then you'll eventually see into the end of the session, you see CVD really start to come down. Then we go into the negatives by the end of the session here. So that really kind of told me like, okay, sellers they're here. They're not giving up this level. Like they're here to defend. And how can I mark this out for lower? So let's get rid of this. So that 4.5 gave us that 747 level for the reversal. So yeah, that was what we were looking for that reversal. But now that reversal's played out, people are looking at the SMT below here, right? We see a lower low on NQ, higher low on ES. So then people are, oh my God, it's buys. Well, then it's reverse again. They don't make it easy. Higher high on ES, lower high on NQ, right? This is after a key open. It was after a 10 a.m. open. It was, right there. So those are the same highs, right? So nowhere close. So you see capitulation of buyers at the highs there. The sellers defend and then crank it lower, but they're not giving anything away on what's going to happen. But already I've kind of seen enough on the tape. So I'm marking out right now. I'm marking out the 5 minute. So this right here, 5 minute swing low to 5 minute swing high of the manipulation leg that created the SMT. Now it is fractal, but I would say, I don't know if we mark this out, it would just be on a different time frame, I think. I don't even think I had it marked out that low, but wow, there it is. So there, like I said, freaking fractal, man. So there's your London low from this morning. So anyways, I didn't even have that marked out. That would have been nice because that would have given me a great exit on my London short. So that's your 5 minute swing low to swing high. You see it holds the midpoint there. We're just making a lower high there, so that's good. You don't want to start to see in the standard deviations, you don't want to start to see make higher highs in this case when we're looking lower. You want to see lower lows. So we confirm, we eventually just edge the 2 there, but then comes down and, you know, comes through there. So that's fine. So we've already started making our way down here. Now at this point, I'm fine if price, after it's hit this 2 standard deviation, sometimes it'll start crashing down. You don't know what's going to happen, right? As long as it holds at minimum this midpoint of this manipulation, but ideally kind of like where the manipulation started right there. So as long as it holds that, and it does, it actually, it holds, I don't know, yeah, that's literally, this will show you that it's fractal too, so right? So it holds literally to the tick, the start of that manipulation, 774650. If I move it to that swing low right there, swing low to swing high, oops, oh no, I think I had it before on this one. Yeah, that one. So that would be our other argument. Yeah, I don't know if that would be considered a swing low or not. I don't know. But anyway, so that would be, you know, that kind of holds the midpoint right there. So that's fine. But anyways, yeah, so moving it back to that kind of actual swing low to swing high on the 5 minute. You see price come down, 4.5 standard deviation. God, I wish I had that marked out. I had it on a larger scale. So I'm still looking deeper. But yeah, literally wicks into there. There's your reversal, 7682. And then that would have been a nice, you know, kind of connecting flight trade to take if you wanted. It would have been a good exit for me. I should point out this was the London trade that I had. So yeah, London trigger was a close below 7720, and then I just looked for kind of a retest of a specific area. I'll show you in the order flow, basically, and then I just wanted to hold it kind of essentially until the end of the session. But New York started to whip up a lot. There was a lot of chop, so I just decided to get out 7705. So that's literally about right there. So 20 points, pretty happy with that on 5 cons. So that's pretty good. And then here I took a trade and then immediately exited because I was like, no, I can see right away that they're not actually going to break out of this IB. Excuse me. So I waited for more confirmation, literally deep into the end of the day. But that's how you have to do it. You know, stock your setup, wait for it, and then pounce. But anyways, yeah, I think I initially did have it marked out there. So I had it marked out, yeah, 7731 there. So again, this is fractal, right? So these levels are still going to be reactive. So it still held the midpoint. It didn't actually reach it on that level, but it still held it and then continued lower. So that's what we want to see. This reversal, so again, yes, it probably sounds annoying. It's fractal. So instead it was the 2.5 level, which is another popular kind of interim reversal point. 2.5 might reverse for a bit and then then continue on further down. So yeah, that was again marking out your low there. I just wanted to hold it until the end of the day. I like to excuse me, it's I'm vain sometimes, and I just want to just have one trade and just hold all session, and oh yeah, look at that. But yeah, I could have been cleaner about this. I just if I know I have a good entry, I want to hold that entry. I don't want to exit, take profit, and then try and look for another good entry. I'd rather just hold. I could have just partialed, I guess, but anyways, I ended up literally just taking profit up here and then entering down there. So I kind of skipped this chop area and missed out on about 20 points, but whatever. It's fine. Yeah, anyway, so that gave us our interim level right there. You could also mark out, this will be interesting, 4 lines up with previous month high, those POCs. But anyways, I think I had it right there before, right? Yeah. Let's just keep it where it was for now. I mean, that is really it's played out at that point. Once I see a reaction like that off the 4.5, I'm done with this kind of. It's done for me in my eyes. And then we're moving on. So, because usually there's going to be another manipulation, right? That happens. And then if there's a new manipulation on a key open, then that is your new projection. I'm not really looking at other intraday kind of projections if there's a new one that's been made. If there's a large scale one, like I made literally last week, kind of, that's giving me like a projection that could literally take like a week or two to play out, I'll obviously keep that one there because it's taking a while to play out. And look, like 2.5 kind of holds, comes back up, retests a key level, continues further down. I'm going to be looking for essentially this to, finish maybe, could be around 7,600. I don't know. We'll see. We'll look at any one of these levels to see kind of what lines up. We're getting pretty close to the golden pocket there at the 5 standard deviation. So we'll see. But yeah, so we have a new projection, right? Sorry, I hope this isn't getting too wordy, but try and keep up. So I'm on the 5 minute key open. We're still looking for the first manipulation of the new key open, which is 10 a.m., right? And we have it right here. So we make a higher high on ES, right? Lower high on Q. Very simple. Mark it out. It's going to take a while to play out, but as it comes down, it's chopping a lot. It ends up holding this 7,700 area, and there's a lot of levels that I am basically wary of, I would say, when it comes to like GEX and like options. I know that's like another confluence to add to it. I think over time, it's just, you'll learn to naturally like you mark out where these things matter. You're not going to like put your whole strategy or dependency on it, but you're going to be aware of it. And I'm always like, not actually calculating the current probability of like the trade that I'm in, but I'm always just marking off like how many things are in line and then just kind of giving it, almost like A to C grade, if you will, kind of thing. So I think that's important as well. But yeah, so we start to come down here and then we actually end up, it was 7761, I think, or 7760 ended up being kind of the low there. And we're just shy, basically lined up 7670 was kind of that's where I got out. That's where I got out right here. I just wanted to get on with my day at that point. I think it was good, It's between 3 accounts, 2,400. I'm happy. I'm chilling. Anyway, so that marked out kind of where I was targeting for the lows. If it had gone all the way down there, great. I don't know, but just the way I was watching price maneuver throughout the day, it was chopping up a lot of people. So let's dive into this today. Because it wasn't super obvious, of course, but there's things that you need to watch out for if you want to avoid getting chopped up, right? Instead of just taking gajillion trades, long, short, like, I don't know. I feel bad because I literally used to be that guy. Like I used to just be like, oh, it's going up, I'm in longs, it's going down, I'm in shorts, kind of thing. That's how they get you. Number one, it is Opex again, right? So during Opex, dealers will try and pin price as much as they can. So that's already going to make it very sticky price action, which is very annoying to trade. However, there's so much bearish momentum right now. Currently, a lot of short-dated put contracts that were bought yesterday with like 2 days till expiry. There's a huge VIX call. VIX is volatility. There's a huge like $12 million call that's still, I don't think been collected. I think that's a month expiry. So there's and the news, everything's like not great. So there's a lot of people betting on lower. And when that happens, the market makers are going to try and shake out as many of the weak hands as possible. And there's multiple ways they can do that. So when it comes to gamma, when we get into negative gamma territory, you've probably heard of it a lot. I've described it in the past, where basically when we get into negative territory, that is when we get expansionary moves because the dealers of those options contracts, they're forced to hedge their positions. So dealers are always trying to stay delta neutral. They're not trying to be directionally exposed one way or the other. Their goal is to remain in the middle because they make a lot of money off of just fees. Theta decay is like the biggest one. And then obviously people that lose out on their trades and their options expire worthless. So they do not need to be like directionally exposed to the market. So in an attempt to stay neutral, if price really starts to cascade in one direction, it'll go into pockets of negative gamma territory where price can actually rip through really quickly. until it gets into areas of positive gamma territory. So positive gamma territory is the opposite. Thinking dealers are buying highs and selling low, or selling highs and buying lows. So they're capping moves. They're reducing volatility, crushing the VIX. Negative gamma is expansion. They're selling lows, buying highs. So in negative gamma territory, when we hit that area, which is largely always to the downside too, that is when dealers will be forced to sell the underlying asset. So for on ES, when we hit the negative gamma kind of flip for ES was about 76.90, 76.94. It was in and around that area. It will fluctuate a little bit, but that's generally where it was. And it was about a $3 billion put wall. So there was essentially saying at that level, relative on SPX, or I guess SPY, there was about $3 billion of notional value of puts that would go essentially into the money at that point. So dealers are really trying to like hold that from happening, because at that point, sellers can really get excited. They're making a lot of money, and the further they push it down, the more money they're making. So there's more incentive to really like sell into that level. And dealers don't want that to happen. So they're really trying to like reduce the they're bouncing price basically as much as they can. They're trying to shake out a lot of those put holders basically, because a lot of them, a lot of what runs the volume a lot these days is 0DT trading options. So 0 days till expiry. So it's essentially day trading with options, right? They're betting on what price it'll go to within that day. And so, yeah, it was a lot basically around that level, 76.90 area. That's the relative on ES. I think it was like 765 or something like that on SPY. So basically, what they're doing is they're balancing it with futures. That's one of the ways that they can chop and kind of like hedge the other direction, is they can just buy a ton of futures. So even though there's a lot of aggression in selling on the indexes, on SPY, on SPX, and then the overall, like the companies within, there's actually a lot of selling. Like if you look at today, like a lot of red. This is all like energy and metals, so ignore that. But like tech, very, very red day for tech. A lot of selling overall. So yeah, overall the aggression and selling the aggression is on the seller's side. But dealers are really just like bouncing price with futures. Look how many futures we're net at one point. Like I think we were like 10K. Yeah. 10K positive delta. So that's 10K contracts, 10,000 contracts more, bought than sold. And price really just went nowhere. So that's just them literally trying to prop it up for as long as they can. Because the longer they prop it up, the more these 0DT options experience this thing called data decay, which is essentially time decay. So as they get closer to expiry, which is they expire at the end of the day, the premium that those holders, the contract holders, can flip them for just decays, because there's less time for price to go in their direction. So there's a less likelihood, so there's a lower premium for it. And as the premium decays, those traders will naturally, depending on how far out the strike is, where they want it to go, they will actually start to go in the red. Even if price is still at where they originally bought it, the longer they keep price chopping, pinned in the same level, the closer these options go to like they're in the red for the holders, or sometimes they're like expiring worthless kind of thing. So naturally, that'll shake out a ton of those kind of like weak hands that are like, screw this, like what do they get frustrated, they get chopped up. So they're out. So then it's really just strong hands at that point. And then it really is just a test of, okay, are the sellers for real? Like, are they going to continue pushing, or was this just all like retail momentum kind of thing? In this case, it was heavy. The market was really heavy. It took a while to play out. There was consistent selling into lows until eventually it broke. And then when it broke, it really broke. And at that point, dealers have to sell the underlying asset to hedge their position, to stay neutral. So, because they're selling, they're on the other end, right? Of the people so they're buying, or they're offering the contracts to buy, whatever you want to say. So they're on the other end of this. So in order to stay neutral for the options that they've sold, they need to sell the underlying asset to attempt to stay neutral. And it's the same way above, if they've sold a lot of call options, a lot of people are betting on price to go above. They've sold a lot of call options. In order to stay neutral, yeah, they're having to buy the underlying shares and hedge with the profits from the gains of, you know, price moving up and them owning the shares. So they're never going to stay exactly neutral, but it's just their attempt. And because of those attempts, that can increase kind of the speed and the nature of which price will move in either direction when it hits those pockets. So anyways, that's a really long-winded explanation. I'm sorry for that. But that really, I feel like, gives you a good explanation of like why you'll experience this chop. And again, like we're in monthly options expiry this week, tomorrow. So, you know, generally when we get into these Opex weeks, dealers have guided price into a general territory that they feel comfortable with, that they're making the most money from both sides on. You know, again, because they're trying to stay neutral, they're making money from the contracts that they've sold that are calls, and that they've sold that are puts, you know, spreads, anything like that. So they've guided price slowly into Opex, usually into an area where they're making a lot of money. The only way in which you'll see like a violent move that would be outside this kind of max pain territory would be like literally a natural disaster, something that no one could predict, because you can bet a lot of these large institutions that are selling these options contracts, you can bet they know what the news is or what's going to happen, kind of thing. So yeah, anyways, once it finally broke into that negative gamma territory, at that point, dealers were having to hedge to the downside by selling the underlying asset. So that created a lot more aggressive move until we got to this pocket, which was also a positive gamma territory spot for options. And then that created a bit of a pin. And then we still see sellers aggressively trying to go lower. So yeah, it looks like, you know, there's clean moves that are generally happening Asia and London, which is frustrating. And, you know, I've seen a lot of people upset about why the moves are happening in Asia and London. So, and then they'll turn into like an Asia or London trader, you know, well, screw this, I'm just going to trade London, or screw this, I'm just going to trade Asia. And then all of a sudden they'll just get chopped up beyond belief, and then the move will come in New York. There's a thing you just don't know. But here's a good rule of thumb. If you see a clean move like this, clean expansion, expect accumulation. After that, when you following expansion, expect accumulation. And then after accumulation, what do you think? Manipulation, right? So after that, you'd see manipulate higher. There's some T right there. Expansion again, continuation lower. It's not always going to be that, but so just don't assume, just be like, okay, there was a huge move that just happened in London. Do not assume that now there's going to be a very clean expansion move in New York. You might have a tiny like reversal, or it might be like accumulation, then reversal and expand the other way, but you're going to see a period of accumulation for sure. It's not just going to be like an easy kind of continuation. Oh, like so frustrating. And then same thing, you know, this is Asia, right? Oh, why is it doing this? Accumulation, manipulation, expansion. Accumulation, manipulation, expansion. So like, it's not obviously not going to look picture perfect, identical to each other, but you can really generally mark it out. There's going to be some type of accumulation, there's going to be manipulation, there's going to be expansion. And again, it's fractal, right? Zoom out. Oops. Accumulation, manipulation, expansion. We're literally in the expansion phase. It's just like a zoomed out version kind of thing. And then you just zoom in and continue playing it. So it's where do we get to the next period of accumulation? I think that should be somewhere in this general area. Right there. We'll see. That's what I'm predicting, kind of right there. Anywhere from like 77 or 75.80 to all the way up to 76.40. You know, I don't think it'll be that high. I think we'll go a little bit lower. We'll see. I don't know. But yeah, that's where I would look for some type of you know, period of accumulation then from there. And then of course it's what do we do after that? Do we accumulate more, or manipulate and then continue lower, or we continue higher? If you want my personal opinion, I think we're going to get to this area. We're going to accumulate for whatever period of time. Maybe we will manipulate like one more time kind of thing. and then at that point it'll be like doom and gloom Armageddon kind of thing. And then I think we're going to go higher. I do not think this is over yet. There's too many people that are bears. There's too many bears in this. There's too many people that are betting on downside. I'm seeing a weird amount of content creators right now talking about the billions in short option contracts that these hedge funds have on the NASDAQ. And it's just such a talking point. It's freaking annoying to me, because one possibility is some of them are literally just like, some of these accounts are literally just run by these institutions. Like, they're smart, they know how to manipulate. So they know how to like get everyone in the doom and gloom, like, oh my God, it's over kind of thing. And they'll get a bunch of retail to pile into shorts and everything. But in reality, maybe a lot of them are covering throughout this process, so what looks like, so this has just come out recently, right? It just came out like a week or two ago, and it was like, hedge funds have a, net $18 billion short position on the NASDAQ. Okay. When did that start? Did it start up here? 18 billion, like the NASDAQ is what, like 32 trillion or something like that? I think. Wait, let me just look. What's the market cap of the NASDAQ? Market cap of NASDAQ. $35 to $42 trillion. There you go. So, yeah, it's freaking huge. Why does it say? Oh, so that's the total value. The market cap is 53.85 billion. But yeah, anyways, they're shorting 18 billion on a total value of like 30 something trillion. So anyways, it's just like, number one, yeah, it's really not that big. What do these funds do? What are they called? They're called hedge funds. What does that stand for? What is hedging? We just talked a lot about that. Hedging your bets. That's a popular term just in like general life and social like settings kind of thing. Hedging your bets. It very simply is you're not exposed one way. You make one bet, but you also make a little side bet just in case, to cover your butt in case you made the wrong decision. These funds manage tens of billions, hundreds of billions of money. They're, levered on a lot of that money too. So like when you think of like notional value, like times X amount, so a lot more. Anyways, so yeah, it's not really a big deal for them to be hedged to the downside when we touch all-time highs again, for as much as this market has gone up. It makes for a really good headline. And don't get me wrong, like there will come a time, and I'm sure it's coming like later this year or something, I don't know. But we have not, there's arguments back and forth about we've gone through the blow off top phase, and I know I've debated it a little bit, but we haven't experienced this period of euphoria where truly like everyone is just in disbelief at the market, and what that euphoria will look like will probably be something to do with AI. There'll probably be some breakthrough, maybe super intelligence, I don't know, something with Tesla robots, I don't know. Might be something where it's just gonna be like, oh my goodness, like this is about to be insane. That will likely be your peak. When basically your grandma's asking you to how to invest in Bitcoin and Nvidia, and everyone's talking to you about it at work kind of thing, that is your general topping sign. But that has not happened yet. Really, everyone's too focused on the economy. It's not good, I agree. But if the stock market has shown you anything, it does not go down just because the economy is doing poorly, at least not yet. We have to have some type of like true financial crisis, where like Lehman Brothers crash type deal, like where investment banks are failing kind of thing, or banks are failing, like on a large scale too. So it'll have to be something big if it's going to be like an economic disaster that creates the downturn. Otherwise, it'll just be some type of euphoric blow off top where I think, it'll be probably largely AI fueled, and maybe there'll be some like magic revelation with Iran, and then the war will be over, and like that'll just like add to it, and it'll be like, holy crap kind of thing. At that point, then maybe that you can mark that out as a top. But yeah, before then, I don't know. I just wouldn't get too eager on it. Wouldn't bet on it. Yeah, because these funds, all they're doing is buying protection. They're just like largely protected right now, and it makes sense honestly for them. Yeah, we might experience like, you know, a decent drop if you think about it on the Nasdaq, like from the highs. You know, if we actually come down from the highs, we're talking about hedge funds, so let's assume they bought somewhere around there. We're talking about, you know, potentially like, yeah, 7% drop. You can bet they're going to make money on that, especially if it's going to be like swift and quickly kind of thing. So yeah, it makes sense for sure. But yeah, I still believe this is going to be like a panic area again for people. You're going to get lots of doom and gloom. And then it's going to get bought up again. And we're going to continue on up, much to many traders' total disbelief. I think if we really fail around 7540, 7600, if that does not hold us, then we're going to look at like quite a significant downturn. That would be quite something too. This would be one hell of a manipulation. I don't even think about that, honestly. I could see it. If that area fails right there, if we fail to hold there, if it ends up, you know, looking like it's going to reverse and it's just a manipulation, and it actually comes down here and we're back down to like 7200s or something area like that, you can bet a lot of people will be like, oh, it's over for sure. And then this will be very key, honestly. So this 7200, 7000 area, 70040, I think. Yeah, probably around there. That'll be a key area to hold. And then that'll be make or break. And then this will be like, you know, black swan event type deal. If we're going to continue down, like something horrific has happened. Iran is never going to come to terms, where the world's, you know, economy is coming to a halt because everywhere is running out of gas and oil, and which is very possible. You know, I'm not saying it's not going to happen. It's very possible that happens for sure. I still think, yeah, it still doesn't feel like the end of it though. It just feels like it's too popular a trade. There's too many people that are like betting on it. And again, if you think about this huge move up, that we have not really like retraced into any of this, well, wouldn't that be something? If it, you know, that's what it's actually doing. If it's coming up here, it's really a manipulation kind of just to come to this point. But what in reality it is like a good retrace to then go higher. I do feel like somewhere in 8K area is going to be the final kind of end to it. It just doesn't, I haven't really seen proof at the highs there. And also, I should have mentioned this too, need NQ to get to all-time highs. It's not just going to leave this, guaranteed. There's no way that's getting left. Not that it's like, I'm not like I see saying it's so low resistance liquidity or whatever, but there's a bunch of gaps in there. And a lot of this selling too that has happened has been overnight sessions. It's been Asia, it's been London. And when we're really selling because it's like the end of the bull market, that is not going to happen. We're going to get Asia chop. We're going to get maybe London chop or manipulation. And then New York is going to sell those highs. You can bet your butt. New York is not going to be giving up the highs to sell at the end of this bull market to anyone but themselves. And that those are going to be some crazy sell days. We would, you know, if we just experienced the highs, we would be seeing some New York opens selling like 3 to 5%. We'd be seeing like staple companies like Costco down like 15%. Like companies that should be recession proof, they're going to be getting nuked, kind of thing. So, and then other companies that are not recession proof will literally not exist. That is, I think, what is going to come later. But yeah, this can has been kicked so far down the road. So it's not just going to be this easy of an ending. We got to really get to a point where people are in like total euphoria, disbelief. The market never goes down. The bears were wrong. Like there's no more, I'll probably be in total disbelief too. I'll say, you know what, actually, no, AI has changed the game. And we're not hitting those lows again kind of thing. If you hear me say that, maybe buy some shorts because I'm going to try as hard as I can to be like the last bear left. until it's like obvious on the tape and stuff. Anyways, I think I really discussed all of it. I guess I should point out, yeah, like what's going on into next week. So we've had quite a lot of expansion throughout this week. And Fridays, very often than not, will revert into the range. However, what I think is possible is actually Friday catches some type of low, you know? So I think we actually might still make a low into Friday. Don't know how deep that'll go. We'll see. Let's see here. Well, let's go to the daily first. So yeah, look at this massive gap that we're still. This is why people are like, oh, the market's over. Like, no, look at all this. We got to sort out kind of thing. So yeah, I would say anywhere from 76.50 area, that was like a tough point to really break out of initially until, you know, this happened at the start of the month on low volume. Clever. But yeah, I would say anywhere from 7,600 to 7,647 area. Yeah, on the deeper end would be like 75.70, I guess. That would be on the really tail end of that. But yeah, if I would potentially, I don't know, we'll see. We may, because we're now in deep negative gamma territory, so yeah, we'll see as this really unwinds tomorrow. This actually might cascade into the lows. And the thing is, I don't foresee there being any type of like reversal kind of tomorrow where you're like, you know, it might actually catch and then look like it's starting to reverse, but then it might sputter out kind of thing. I don't think tomorrow's at the same time as Opex also just going to be like the reversal point. That would be pretty impressive. But it might look like, you know, there's some low has been hit and then it'll start to retrace up. But then I think we'll get one more manipulation before going higher. If we do, in fact, go higher from there. We will see. Anyways, yeah, I think that, oh yeah, let me talk about this quick. Can't remember if I did or not. Initial balance. If I did already and I don't remember, I'm sorry, I'm an idiot. Just skip past this, I guess, but I can't remember if I did because I've tried this video like twice. So initial balance. So you're getting chopped up in here, and I talked about everything to do with like gamma and dealers, you know, trying to prop it up with futures, and that's creating all this chop. So yeah, sure, you don't have order flow, so you're not, you know, you can't tell all that. Maybe you don't really track gamma, that's fine, kind of thing. When we are on like data heavy days, that, you know, a lot of times recently there'll be like data that comes out that everyone has a lot of bets on out of the money kind of thing, thinking there's going to be a large move, and it ends up just chopping for a bit. And that's exactly what it's doing. Just like today, it's really just shaking out buyers and sellers and until the actual move happens. So you'll see a lot of people mark out the first 15 minute. That's a strategy. They call it 15-minute orb, right? 15-minute opening breakout. So that would be, there's the first 15 minutes right there. It's on ES. Something on NQB right there, right? 1, 2, 3. Yeah, so that would be your range, right? So you'd want to break out of that. Again, ES more clean on that, but so that's pretty good on your like average day that has high volume, lots of volatility. Maybe there's lots of stuff going on. That's like sometimes a very executable strategy, and it's one actually thing that I look for further confirmation to like hold a trade, is to see that we are getting away from that initial 15-minute move. That opening range kind of thing. So there's this thing called initial balance. It's big in auction market theory, order flow. Initial balance is essentially the first hour of the session. So mark that out to right there. You know, it says 8:30 for me. So this is 7:30 to 8:30 for me, which is 9:30 to 10:30 Eastern time. So that's kind of like a more, it's not even more popular right now, but I think especially on days like today where, you know, there's going to be a lot of chop and we're getting to Opex, there's a lot of pinning action going on. If in order to stay away from getting chopped, I think it's really important to mark out the initial balance and then look for us to be like breaking out of it. So that is what I essentially did today. I said in the Discord, I said, hey, I'm waiting to break out of this initial balance. You know, I'm not going to waste my time in this chop kind of thing, because I'm not really seeing any moves within the tape. I'm seeing just, you know, a lot of, again, like a lot of buying, selling at the lows, buying at the highs. It's very like classic marker of just choppy price action that's really going nowhere. And even then too, if you really like, you could go, I think you can go in like the 3 minute. And so initially you're not even seeing any gaps. So if you're seeing, if all you have is just candles, you're looking for at least after the first 15 minutes, you want to see some gaps forming to see that there's at least a strong effort for price to move out of this zone. It's not even happening actually until we manipulate these highs, right? Then that marks out, like we had marked out earlier, the standard deviation. Right there. Higher highs on ES than NQ. Mark that out. And that actually was the first time you see, you know, your typical like manipulation, break a structure, gap retest, there's a breaker block. Like it's actually all right there. And then retest. Wow, that's actually pretty perfect. Yeah, and then that marked out a projection for lower. But yeah, I think that's a good way to avoid getting chopped up is, you know, on a normal day, mark out that 15-minute zone. You know, you don't have to play the orb, but, you know, whatever your strategy is, it's really good to mark out, because if we're staying within that first 15 minutes, then there is a very low chance, there's a very low chance that the market is actually going to trend in any direction. It's just going to stay there. But yeah, if you're marking out the first hour, I'm on the 15-minute now, I'll go back to the 5-minute. If you're marking out the first hour, the initial balance, then that kind of just like increases the chances that there's going to be, you know, some move actually outside when you see it actually start to break out of it. I took a quick trade there, I think I already said, and right away I could tell that it was just getting held inside. I can even go to it, like what I was seeing. So we started to make that move down, and I entered, it was like just at the bottom here. Just hoping that we're gonna like break away. I saw some aggressive selling coming into there, no continuation. And then as soon as I saw that guy and this started to move up, I was out. I was like, nope, I'm not even gonna risk it. If I see strong selling like this, I want to see just like maybe the quickest retest and then like gone basically. But instead it was just holding. So I was out right away. So that was kind of how I avoided, again, getting chopped in there. I was very wary that this could stay pinned for potentially all day. But I just said as soon as it broke that level, we could look for lower. So yeah, and then that was the second trade of the day that I took. So yeah, I hope that helped. Sorry, this is a really long video, but yeah, just like going over the trades today, because I think I just wanted to put out there, because I know I've been watching so many people get chopped up this week and during this month, and I just like feel bad, because yeah, obviously it's like disheartening, you know, getting chopped up and you're like, oh my god, like screw trading kind of thing. But there's just little things like this where if you just mark them out, you stay patient, can't stress that enough, like really stay patient, then, you know, you'll save yourself a lot of time, money, and like frustration. And then you can just, you know, I just did nothing all day. I set hella alerts. I set alerts for like lower than here, basically, like below the 90s. And as soon as it triggered, you know, I was in. I think my entry was actually like right there, and it went a little bit up, and I was like, oh, we'll see. But then just continued lower, because we were, you know, sellers had already broken out of there before, after all this garbage. It was later in the day. Oh, last thing I didn't mention. Oh my god, this is so long. Sorry. Lunch, again, this is, you can transfer all this to NQ too. I was on ES today, so that's why I marked it up. I've talked about this before. That's why, actually, I think I had it marked out at the start. But if we do not get a trend that forms before lunch hour, I mark out what I call lunchbox model, my lunchbox model. Mark out the first 15 minutes before lunch. So for me, that'll be at 9:45, right? Because I'm Mountain Standard Time. So for you, that'll be 11:45 Eastern Standard Time. So I mark out, I'm on the 5-minute. Yeah, so first 15 minutes before lunch and then after. So all the way to 10:15 for me. So there's my lunchbox model. That is my new kind of zone. Think of it almost like a like an opening range kind of thing. Like this earlier morning session has been a chalk. We're into lunch. Now we're going afternoon. You can almost at that point, if we've had no trend develop kind of here, you can almost start to think of it as like two different sessions in a way. And this is your in-between accumulation. And what you could see here, you'll look for two possibilities basically. If you've had no trend develop again in the morning session, if there's a trend already going, ignore this. But if there's no trend that's developed, I really like this, and I'll just mark this out as a zone, right? So that's why I'm stretching it all the way across there, but it's that half hour, right? So you look for either a manipulation outside of the zone and then for it to rip across the other way, or you'll look for it to essentially treat it as a breakout, basically, where it'll bounce around the whole range and then it'll just start to break out and it'll retest the outside of that range and it'll be gone, kind of thing. So it's very simple. That's like a normal opening range strategy kind of thing, is like, does it break out and retest and then continue? Or does it manipulate one end and then just rip across the other? Very simple. So in this case, again, heard me say it 1,000 times before, fractal. Accumulation, manipulation, distribution. So AMD, that's not a D, that's a slightly worse, almost better D. Okay, anyways. Yeah, so AMD right there, manipulate outside, very obvious right there. Whenever the key way to see if you've been manipulated is if it's obviously instead of retesting and holding, you want to see some gaps forming across that range. So across your manipulation range, you want to see gaps forming through it. That'll tell you that that was the manipulation and this is distributing, right? It's like we've even created a gap there and an inverse. There you go. There's another way you can do that, right? Inverse. So we've gone across, manipulated, and now we're just like boom, boom, boom. This is just aggressive sells all the way down here. Even just barely tries to retest the outside of it. Oh, it actually does, because the range is just slightly lower. Right there. See? Taps, breaks down, just the quickest like tap of the outside of that range, and then continue lower kind of thing. So this was all chop. This is annoying. But yeah, so that would be the other model that I would trade. If you don't see any type of trend that starts from the morning session. Anyways, sorry for the long video. Yeah, there's a lot to get off there. Obviously I didn't post last week. And yeah, I think there's just some really helpful tidbits there for people that got infinitely chopped today and that are new to Opex, and just trading in August has been terrible for them, all of it kind of thing. So just lots of stuff to, I think, incorporate or at least be aware of that could greatly increase just the odds of your trades winning. So anyways, that's it. We'll see if I trade tomorrow. I'm not really sure. I'm going to be watching this area right here, like I had it marked out before, and then, larger time frame. I could see us actually getting maybe down to here. I'm not sure, this 7640s area. And then kind of some reversal from there. And it looks like we're going to reverse that. Maybe is like, just like a interim low. And then we actually come a lot lower and manipulate down tomorrow to like 7,600. That would be another like crazy possibility. I have no idea. We'll see. But yeah, I'll be watching that 7640s, otherwise 7,600 area, either one of those areas on ES. And then I don't know, wherever NQ is at that point. NQ is the most bearish sentiment right now. All the put contracts, not all of them, but a lot of them are on NQ. They're on tech. So yeah, and it's mainly, if you're wondering why, it's literally just because of yields. It's putting a lot of pressure on people's outlook of interest rates and stuff. Having said that, I think short-term, yeah, it's starting to climb again. Yeah, because everyone's freaking out about the 10-year, the 20-year, the 30-year. For those longer-term bonds, that again is uncertainty for 10, 20 years from now, 30 years from now. But short-term rates were actually falling. The 2-year, I think the 5-year, and then treasuries, like we're talking like 6 month a year. So that is, when those rates are falling, that is just more like kind of the market saying, oh, we're not so sure that they're going to hike rates. It actually might stay the same for now. But that is also being manipulated too by Bessing to having the government essentially like buy back treasuries, like a lot of them too, just to put downward pressure on rates. So that's some manipulation at its finest as well. Anyways, this is literally an hour-long video, and I'm just gassed from talking. I hope you learned a few things. Ask questions as always if you're curious about anything. I am pretty open to answering, most things kind of. But yeah, good luck tomorrow. And then again, you can look forward to basically after this week, historically, the PA just gets a lot cleaner. We just get more volatility. So lots of money to be made into the end of this year for sure. Anyways, take care. Bye.